Good day, fellow investors. Often asked Ferrari stock analysis. I hope you enjoy it. If you do, smash that like button. So, since the IPO in 2016, Ferrari did really great. Really good. Even so good that the market cap now is close to the parent company that spun it off recently. So that's how it often comes with these spin-offs, but a lot of value for shareholders that got this great stock over time. However, we'll discuss also Stellantis as I come to the letter S of the Italian stock market that I do on my research platform. But let's discuss Ferrari, what's the risk and reward now, and let's start with the financials. So when it comes to financials, I like to use ticker. If you want to support the channel, you can check it out in the link in the description below. Financials, and I can easily see the history of the company. I always like to look 10 years, and you can see that revenue doubled over the last 8-9 years. That's nothing spectacular, but a double in revenue is good. What happened is that they did really well on net income that quadrupled till now, and that is what pushed the stock much higher. However, when I look at the balance sheet, nothing wrong with it. They are having some goodwill here, increasing the current assets, a lot of cash, which is always handy. They have stable debt levels, so nothing wrong there. But I look at the retained earnings, and this must be something from the IPO, and there is a lot of losses retained there, which means that Ferrari is enjoying great times, but keep in mind it also had its bad times. So nothing wrong, very profitable, growing the profits. Let's look at the business. And now Ferrari cars, and then you go on their page, and they are now going into fashion, the Ferrari collection, but okay, they are trying to diversify that brand across other things, restaurants, etc. But the races aren't going good. Max Verstappen is killing them. But okay, their strategic priorities is to win races, of course, enhance client experience, new models, everything, and broaden the lifestyle client base. However, when I'm looking at this, in order to justify the valuation that we'll discuss in a moment, if you want to keep these high margins, then you need to be exclusive. You cannot just keep increasing the number of cars you are selling. At some point, people will say, okay, it's not that exclusive, and the prices might go down. For now, it's still working, everything is great. But then again, keep in mind this number, this is the industrial free cash flow that they are making. Likely races are not winning that much, so not making much money. Sorry for the joke, but okay. If we look at what they are doing, of course, sales did well, especially the cars and spare parts, nothing wrong that. Their guidance is for even better going forward, which means they have the sales in the books, but still they will go up to, let's say, $1 billion in free cash flows. When I look at the valuation, it's a P ratio of 50, dividend of 0.4%, not 4%, 1 billion at best, with the world flushed with money on a 54 billion market cap. So my conclusion is this is like Bitcoin. If someone will pay more and more to own this brand, okay. But at some point, people will say, okay, this is insane, especially if there is a recession, less sales of luxury cars. And I often see in comments that the rich don't get hit by the recession. The really rich not, but the other quasi-rich do, and then they don't buy Ferraris, and then it's pretty ugly. So the fair value for me, it's a P ratio of 15 on great times, thus 70% down. Nothing against Ferrari, but this is the investing reality, extremely risky.